So essentially in this video, what I want to show you is very straightforward. I want to show you how I was able to catch this particular trade using market structure, right? So essentially, there is really nothing much with market structure. And when it comes to trading, there are a couple of things that you need to know. And I want to tell you the importance of understanding when it comes to time. Timing when it comes to like taking any particular position. It continues going up. Now, usually when it's going up, before you confirm that particular thing has broken, you must see like a break of structure at this particular area, right? So looking at this, so you see that this particular market, you will see a break of structure at this particular area, right? So when this market is coming from, this is like a bullish market, right? So this is a bullish market. So this is a bullish market, right? Bullish market. So now when they come to this bullish market, you will notice that the market will, once it's going up, right, and then it creates a support, then it breaks the previous high, right? Once it breaks the previous high that is created, then that means that the market is trending. And usually when it breaks the previous high, it will usually go back to retest that particular area. Now the same thing applies to this same thing applies to a bearish structure. So this is a bearish structure. Let me just label that. So this is a bearish market. It's bearish. Okay. So this is a bearish market. So now same thing applies here. Once its market is going lower and then it goes like it creates a low. Now it breaks the previous low, right? And it will go back and retest that particular low. So this was exactly what I saw, and that made me to decide to go ahead and uh, look for this particular trade. So ideally, when you are looking at multi-time frame, this is a multi-time frame analysis, and I want to kind of show you the entire process of how I looked at this particular thing. Now, usually when some people are looking at time frames and looking at several times from another, one of the things that they tend to do is that they tend to start looking at everything. But really, you don't need everything. What you need is majorly the current trend. So, for instance, when you look at this, and this is a 1 hour time, this is a daily time frame, right? So this is a daily time frame. When you look at this, what do you see? This is obviously a choppy market, right? So this is a choppy market. Okay, let me just show you with this. You can see it here. So okay, let me clone this. Okay. So so this is a choppy market, right? So you can see this. You can see. So this is a choppy market, right? Or you will just put this at the last low that was created. So now, looking at this, you can see that this is the support and this is the resistance, and the market is trading inside both the support and resistance. So you can't really do much, but is that true? You can still do something. Why? Because if you look at this, you notice that the market is currently bearish at this particular point. So you look at it from here, you can see this from here. Okay, let me demarcate it so that you can see what I'm talking about. So you see this right now. So you see this right now. So you can look at it from here. Now, the last time that the market took out this high, it's from this point onward, it became bearish, creating lower high. So this is uh so this is a high, okay, right? And here is lower low. Here is this is lower low. So this lower low right here. So you can see that. And at this particular point, right, there is a break of structure, right? This is lower low. And at this particular point, there's a break of structure. So here there's a break of structure at this particular point. So you can see that there's a break of structure at this particular point, right? So this is where that break of structure happens. So now, what you want to do now, you already know what you are looking at. This is on the daily, right? So now you want to go on the 4 hours and see if you can find more information, right? So now we'll go on the 4 hours. Now looking at this same price action on the 4 hours, right? So looking at this same price action on the 4 hours, okay. So now you can see this on the 4 hours. You can see the same price action on these 4 hours. So this is the high and this is the low. So let's adjust it. Let's adjust it. You can see this is the higher low and this is the lower low. Now, all you need to do right now is that since you have seen this right now, you want to look at which you want to look at. Okay, let's delete this. So you want to look at where is the last time that the what was the last reaction the market had before moving bullish, and you can see that from here, this particular candle here to this particular high. So now, once you see this, once you see this, you already know that the market will come and retest this. So now the next thing you want to do is you want to ask yourself that how can I react to this? Now for you to react, since you are trading intraday, you have to look at the basic 15 minutes time frame. Expecting the market, okay, so this is the 15-minute time frame. So now you're expecting the market to go back into this particular area, right? So you're expecting the market to go back into this particular area and you're looking to capitalize on this opportunity and looking to capitalize on this opportunity. So let's see what happens, right? Let's see what happens if there's going to be a reaction in that particular area. So, so let's make this a bit fast. Okay, lines. So so here we want to set our entry at this area. Okay, so now we see this candle. So let's go. So now, so now our trade have been triggered. So this is where you get in your entry. Going with 7 lots. So now that you have gone in with 7 lots, the stop loss is 12, 13 pips away. Our stop loss is about 14 pips away, 13.8 pips away. Same thing here. Our stop loss too is other plus is 13 plus. Thirteen point eight. So this 14 pips. And I take profit. I take profit is at this low, right? So is at this low. So I take profit is at this low. Now, so now we're looking at risk 6.8. Same thing here. 6.8. Let's see how this plays out. So let's see how this plays out. So you can see that. So if you like, you can take your first profit. Can take your first profit here, you know, and then target After that, this as a first take profit. Then let's see if our second take profit is hit. If our second take profit is hit, or we expect a complete takeout of this structure. Okay, let's fast this a bit. Yeah, okay. Second take profit hit. So second take profit hit, right? So let's see how that played out. Let's see how that played out on our account. Okay. So is our display now. So now we are on 65 pips, $5,000 profit. So let's see how that plays out.